Okay, today I want to talk about this long-term trade I'm taking on AMD and why this is probably the best time to take this trade. I'll go to trade options. I'm looking to take a leap option. If you go to expiry date, January 2023, go down to the 75 strike price at 1708 or 1710. You could put order in to hold an AMD option for 2 years. Right now I need to get some capital in there. I'll get that in Monday, but that's why I plan on taking, and I'm going to tell you why. So if we look at my watch list that has the implied volatility rank, right now the implied volatility of AMD is at 37.87 versus 1 year low at 37.73. What this basically states is that AMD options are at their all-time low, that it's experienced IV crush, and all that implied volatility has a lot of upside to increase the price of the option. So it's basically saying it's a really cheap option to buy right now. And if we look at AMD, what the analysts say, it got a high price target of 135, a medium price target of 99.09, and a low price target of 66. Even if it goes up to 99, it's like a 30% increase. And with the leverage of option, you can assume like 45 to 50%. And if the implied volatility goes up, you could potentially make more than that. But what I wanted to show here is the earning estimates and how they've been performing quarter to quarter over the past year. If you can see on the bottom, they expect quite a bit of growth over the next year. They expect the growth rate at 171% in the first quarter of this year, 207%. The second quarter, then 59%, and kind of slow towards the back end of the year. But if we look at the earnings reports, they have been blowing them out. The last 3 earnings reports, they have surprised by 8%, 12%, and 9.76%. And their next earning report will be released 4/27/21, and I believe that will be a catalyst to get it out of this range that's been trading in lately. I know I've took a Iron Condor because it's trading in such a tight range, so that expires. But looking to the week of 4/27, that might be a good time to put in a what's called a straddle option, where you buy a call and put at the same price, and the spike in volatility will increase the value of the option. So I might take that, but right now, because I'm a long-term bull on this, I'm going to take that long-term leap option. If we look, this is another reason I want to take the trade, is we look at the 9-month chart. I'll pull up the tools, get you a little horizontal line. Look at this level of support. Look at it. It's touched it here, ran up, touched it here, touched it here, ran up, touched it here, touched it here. So over the last 9 months, this is held up as a strong support line. So this might be the low with everything crashing right now. And it even just might run up to 100. In that case, you could put a bull debit spread for the, say, this was in January. So January peaked out, and we're in March, April. So in 3 months, you might buy a bull call spread from the current price to 100 in the next 3 months. But look at all that. And we'll see, we have resistance. We're going to have resistance at the following points. Let me draw the tools. We'll have resistance when it's coming back up here. We'll have resistance here. And we'll have resistance around here. And we'll have the main resistance we need to beat. If we can break this 9,800 range, it could run. It could run the, see this range right here, 73 to 98. So that's a 25. So if it breaks this resistance, it can run 25 again. So it could potentially have a price target of around 125, 130 if it could break If it smashes earnings, it could break that resistance level. That's typically what you do. You take the level of the range and you add it to the top. So we're talking about a 25-point range. So if you add 25 to 100, you know, you could have a price target long term about 125, and I think that's what the analysts have over here. High target of 120, 135. So yeah, some of them are saying it's just going to get back to their 1-year high, but I think with everything going on, it could smash earnings. You know, there's such a high demand, I don't see it slowing down. If we look at their financials, they're crazy. You know, they're coming in with a net income of 2.49 billion. You know, their operating expenses, yeah, they're a little bit high. They got an operating income of 1.3 billion, and your EBITDA has been growing. Look at how it's been growing over the past year. So this is year to year right now. EBITDA has been growing, almost doubling over the past every year. So it's been increasing in demand, and with Bitcoin, they're not going to limit Bitcoin miners on the machines. Their processors and graphics card are outperforming Intel. So yeah, it's been a strong. If we go quarter to quarter, we look at the EBITDA is growing, and the net income is growing. Look at this last quarter. I mean, it smashed its results and ended up tanking. So I mean, a lot of the price was baked in, and with this tech correction, but you know, at this point it's undervalued and it's at support level, 9-month support level. So you know, price target of 100 to 125 in that range, especially if these next couple earnings, it could break that. So that's why I'm taking this leap option. Potentially could double in the next 2 years, and with the leap option and the leverage, that could be a 3 to 4 time gainer over the next 2 years. So yeah, I mean, it's got a great outlook. I pulled up some articles on it here. They're saying that it has a valuation score of 76 from this Investor Observers. I don't know how they measure those metrics. I mean, I guess it's going to tell us 12-month PE ratio of 38, which places above the historical average of 15. Month earnings per share of 2.06. Currently AMD is 12-month forward grabbing ratio, PEG, that's like kind of the growth ratio of 1.5. So, this makes currently overvaluing AMD in relation to its projected growth. So basically it's priced to what it's going to grow. The lower that number is, the better. And the PE ratio, of course, the price to earnings, that's kind of saying it's overvalued or not. I mean, these numbers you could not really take too seriously, because you know, Tesla's price to earning ratios was like 3,000, 4,000, and some of these other companies too, Square, Fiverr, yeah, they had these huge price to earnings ratios, and people were still buying them because they think they're long-term growers. So I'm not too sure about that, but this PEG of 1.5 based, if it hits earnings, that pretty much means that's going to go up almost. So I mean, I had another one, AMD. They're talking about their chips are going to be able to compete with Intel. This was from the Motley Fool. AMD is not going to fall behind Intel anytime soon. Like I said, their chips and processors, if you look, the specs on them are pretty good, and they're making chips for PlayStation, and they're making chips for you know, these automobiles. So yeah, they're a profitable company. They're trading at a low on support. They have long-term growth. They've been smashing earnings. I mean, this is like the perfect time. Their IV rank is 0, so this is literally the perfect time to buy AMD. So I'm going to go ahead and buy that long-term option come Monday, and just kind of share my thoughts. And yeah, I'm going to look at some of the other companies as well and try to make some more videos. But you know, being down so much from that covered call just killed me. So yeah, I'm gonna try to make some money with some iron condors and some other methods, and bull put spreads and bull call spreads as well, and just go from there. But AMD is definitely Definitely a long-term winner, and you'll be sorry if you didn't get in at $77.